Good morning, everybody. It's Chris here from Student Education with the 4 Majors Analysis Update for the 1st of February 2012. Hi guys, it's going to go over the Euro US dollar to start with on our CTC 6 screen strategy template. Let's have a look. As you can see, a prolonged downtrend, and recently, start of this year, we've seen a nice bounce to the upside. This, however, I feel is still a corrective move against the overall trend, which happens to be still negative. We are seeing corrective here, move to the upside. However, we've started seeing a bit of hesitation. This hesitation occurring roughly around the 120, 125 mark. Sorry, 1320, 1325, 100 mark. We have seen a definite support and resistance here in the past. Noticeably back here late September, through again late November, and just these past couple of days we've seen hesitation at level there. Definitely making some highs. However, this indication, this candle here failing at that level there, and psychologically a pullback has occurred over the past couple of days. Prices heading to the downside again. There is some hesitation levels in between. However, I see this bit that we've seen just recently as a bit of a corrective move. To see this to bounce higher, ideally we'd like to see it trading above the 1325 mark, which would definitely give us a looking to go longer in the next couple of months. However, as it stands now, you can see the past couple of days has found support above the 50 period moving average here. Today you can see it's quite tentatively testing it again. Yesterday we saw the same thing, price really moving lower, however pulling back late afternoon in the US session. However, this morning on the Asian session, pretty much following that downtrend. If we see a break below that, you can see, noticeably the CTC is still negative across the board. We do have two parts of our CTC strategy positive. However, we need all four to be in our favor. In this case, daily is clearly showing a mixed signal at the moment now, with overall sentiment still being bearish. This is a corrective move against the overall market, which happens to be bearish. So as it stands now, looking for further correction to the downside. Notice the 4 hour, you can see quite clearly a top here occurring. Yesterday I saw pretty much a trade set up on this, primarily because the RSI, plotted RSI on here, and quite clearly we saw divergence on this pair at this level here, 1320, 1321, and it didn't make any point going any longer, primarily because we started seeing divergence, especially with these two previous highs here. As price was heading higher, RSI was showing lower highs, and that indicated that there was no pretty much momentum with the actual move, which is not what we really wanted to see. If we're seeing prices moving higher, we want to see relative strength really gaining strength in conjunction with that move, and it didn't happen. So I felt that we were seeing a top, and sure enough, got in at this, just the break over here at 1600, and I'm still in this one short at the moment now, so pretty much move my stops to break even overnight just to capitalize on that, but at the moment now I'm still looking bearish on this pair. Next up is sterling against US dollar. Let's have a look at this pair on the daily. Let's move it out. Same here with its European counterpart. Price has really been correcting itself over the past couple of weeks, and sure enough we've seen a huge pullback, which has really much taken out all this hesitation that we saw over the December period. And where it's left it now is pretty much trading above these highs. This definitely seems to be 15,700 seems to be a resistance level in the past, and sure enough price is trading above that tentatively. The longer it trades above 15,700, the more likely is we're probably going to see price heading up to that 15,900 mark, the institutional moving average. We saw that tested in late October, November of last year, and at the current things are going at the moment now, there's no reason why we can't see those highs being tested again, and the CTC on our daily is giving us an all systems go. Ideally you want to be buying at the top of this previous candle here, just to limit your entry of being triggered falsely before price pulls back. So price at the moment now on the Asian session has pulled back slightly. However, we are trading by 15,700, which you can quite clearly see in the past has been a relative resistance, a ceiling level. We are above it now. Got to see price making a support, a definite support, and then I'd looked, if anything, to be looking for entry levels above 15,800, and my first target would be here at 15,900 on this pair. So story is similar. Intraday 4 hour, it's got to be showing you positive across the board. You can see quite a huge move to the upside, moving with a lot of confidence, and price is really hitting up to those highs. As I mentioned, 15,700 on the daily is clearly an area where there happened to be a prior resistance before, and you can see price is pretty much trading above that. We have had some shooting stars on the Asian session. As long as price can actually continue to trade above 15,700 for the remainder of the week, that will just bode well for confidence, sentiment confidence above that area. And if we can find another bounce of support here, then we should be looking at 15,900 overall as our next potential target. We are expecting nationwide HPI month-on-month figures. The forecast is to be lower than the previous month, so just watch those figures. At the 7 a.m. GMT as we speak now, that forecast, those figures are going to be posted. What other news? We have manufacturing PMI at 9:30 a.m. GMT this morning. We're expecting a slight rise on those figures from 49.6 previous to forecast of 50.1. So could be interesting. So just see if price can actually stay above 15,700 for the time being. Then we should see price hopefully bouncing higher. So make sure if it's trading above 15,700, then should be looking for further highs. If it breaks below 15,700, then look for consolidation against the trend, which happens to be still to the downside. However, look for corrective move sideways. But if price can stay above 15,700, then we should be looking for ultimately further highs. Moving on to the US dollar Swiss franc. Let's have a look at the daily trend for this pair. Quite clearly see that price has just pulled back just recently. This is conjunction with the euro and sterling doing the total opposite, moving higher, and US Swiss franc pulling back. This is ultimately the outlook on this. You can see quite clearly the price has come unstuck here at the 9600 mark, 0.9600, and sure enough we've seen price pulling backwards. Just recently the CTC on this daily time frame has gone negative on all counts, but you can see over the past 3 days we've seen that 9100 happens to be a nice little support area for this pair, and we've seen a bounce over the past 2 days, couple days to the upside. If price, remember this one over here that's at 86, this is the intervention on the euro Swiss franc is 120 parallel to that they wanted price to be trading above, and as long as it stays above this area here at 86, then we should see further extensions higher. If we saw price trading lower in this area here, ultimately also be below the institution moving average, then there would be pause for concern. So as it stands at the moment now, we're seeing a corrective pullback against the overall upside market on this pair. As long as it can remain above the 9100, then there's nothing to worry about. You'll see we should be looking for potentially sustained upside movement. There is hesitation on either board. You can see prices trading within this consolidation range over here. Notice to be at 9300. Price we need to get above that to see any further extensions to the upside. However, we see price failing to break the 9300, then we should be looking for a potential for correction for another move to the downside. First extension, pullback, and then second extension lower. So be hesitant about that. I'd look for potentially looking for further bullish setups for price to be trading above the 9300 mark. For further downside movements, look for price to fail at this 9300 with a bearish engulfing to look for further entries to the downside. Last pair of the day is the US dollar Japanese yen. Let's have a look at the daily to see what's been happening over the past couple months. You can quite clearly see price has been just moving sideways, intervention in between all this noise, but most importantly price is heading lower. There's talk going around, there's mentioning of intervention on the US dollar Japanese yen pair as the yen starts to really grow in sentiment. And are we going to see intervention? We saw it saw it recently here at 75.50. Is there an opportunity, or is there going to be an intervention yet again by the Japanese government to try and stem this bullishness on the yen pair against the US dollar cross? So it's one to be wary about whenever trading this. There's always going to be that chance, and sure enough, this negativity here was really held back with all this intervention that occurred back in late or early August and late October. of this year. So intervention, a potential is potentially word going on that intervention might be the word of mouth now on the yen cross. So be aware of that when trading this pair. Yes, you have seen some fall to the downside. However, you can see that momentum has shifted slightly after this bearish correction over here. We're starting seeing spinning tops. The moment you start seeing spinning tops occurring on price action, you know that there's hesitation out there. So there's hesitation at the moment now. We want to see a definite clear move by the market, whether it's bullish engulfing to the upside to confirm that market sentiment is looking favorable for corrections to see these potential highs at 78 being retested, or bearish engulfing. But at the moment now, pretty much going into this indecision phase now, and it being so close to potentially where we saw intervention before at 75.50 gives me it gives me itchy hands. I'd stay away from this one until we get a definite indication of where price is likely to go to in the next couple of days. Other than that, that's it, guys. Hope you have a fantastic trading day. Keep it simple. Let the market show its hand before making any judgments on entry levels. And if you are in any positions, please make sure that you are using stop losses, etc., like that, to maximize your potential rewards. Until then, have a fantastic trading day. Until tomorrow, trade serenely.